Here's a view of the market from the eMiniDayTrader perspective for Friday, February the 6th, 2009. Starting once again with our market profiles. Here's our overnight session, Thursday to Friday. Here is yesterday's market profile and volume profile, and here's today's. And you can see that yesterday and today are somewhat similar in the sense that the first period of trading is in the vertical red and blue. Here's our vertical red and blue from today. So you can see that the market extended the range quite a bit yesterday and also today. The move up yesterday I was characterizing as bullish, and that the market would likely go and at least test the 849.50 area, and if it did pierce through there with some conviction, then it would likely continue up in a pretty strong fashion. So overnight the market did not do that. It got very close to it, and then the news was released at 8:30 this morning Eastern Time in regards to the non-farm payrolls and unemployment, which were still and are still very bad, and yet the market just didn't really do much. I mean, it dipped a little bit during that time, but did not sell off in any major way, even though that news was considered bad, although I guess it was also expected. But when the regular trading hours opened up, the market just found a head of steam and just marched higher in a very strong fashion. And so moving away from the value area from yesterday and piercing through that 849.50 area, moving higher, gave us indication to make sure that we tried to be on the long side on any trade, and if we did take a short, to be nimble with it. On the next chart here, I've just thrown together some overlays that we're looking at, and the one that I was making reference to yesterday was this area here, where we had in essence two value areas, if you will, sort of an upper and a lower, and you can see that our low today was right at the upper value area, high volume, that was formed based on the previous 2 days of trading. That would be Wednesday and Thursday. The overnight market got down as low as around in this area here, so it didn't really get all that much lower overnight, and then in essence more or less dipped to the lower section, if you will, of this upper value area, and then of course had the big move up to finish off the day. So when we were making our trades today, we had all that in mind, and you can see that our software here produced a very large balance area, and we actually tried to get long right in here near the midpoint of the balance area. The market did not pull back. It continued higher. We did have a quick short trade right in here. It was set up, which was profitable, so that was nice. Sorry, that was a break-even trade. It just nicked us, because what it did, it reached our first objective, came back, and stopped us out for the same amount. So it actually turned out to be a break-even trade, although the market did have a nice dip down after that occurred. We're able to get long in here after the dip, and once again it moved in our favor, a point and a quarter, and then turned around and dipped a little bit below us. Just had a little bit of a dip right here before it moved up. So unfortunately, once again, we ended up with a break-even trade, even though it was, looking like it would have a very nice move higher for us. We did end up by taking another short trade in here, which hit our first two objectives, and so that was nice. We're stopped out at break even just on the final partial on that one, so that was a successful, nice trade. We also had an indication to get short in here. Unfortunately, we got stopped out on this trade, and we knew that we were going against the grain. So there's certainly, out of all the trades that we had today, we did have a couple of short trades, and with the kind of structure that we had and the expectations that we had going into the day, and the fact that the market was moving much higher and above the known previous barrier, resistance barrier, that we were very, very cautious on getting on the short side, as I was pointing out at the beginning of this video. So many of our traders take that in consideration and would not have traded on the short side today, just waiting for the long trades, and for that matter as well, giving the long trades a little bit more leash, in other words, being more lenient with them, because whenever you're in a market under this kind of condition, you've really got time on your side when you're entering a long trade. And why I say you really need to be nimble on the short trade, because you're going against the grain, and there's numerous structures here. That the video that I just posted on the members website, I think I spent about 10 or 12 minutes just going through all of the various bullish structural formations that we had going into today and in early today. And so certainly many of our members would not have been taking any of the short trades because of that. We did have one more trade on the long side when the market dipped down here, and we're able to get long here when it dipped down. Once again, it was kind of, this is amazing because the market moved about 3 or 4 ticks against us when we first got into it, so it was working fine, and then rallied 5 ticks in our favor, so didn't quite, just missed our second objective by 1 tick, and then had this little dip right here to stop us at a break even, and then marched considerably higher. So it was kind of unfortunate because we've kind of been waiting and waiting to get into another long trade. It came right down to our price, got a really nice fill, but then kind of got shook out of it. So, but once again, that's the kind of trade too that our more experienced traders, understanding the condition of the market, could quite possibly give that a little bit more leniency on the trade management to be able to participate in that nice up move. So it was kind of an unusual week for us in that regard. We had several trades this week that turned out to be, break even or something like that, and or very close to that. And if we had been fortunate enough to be kept in the trade for a little bit longer, it would have been extremely profitable. So it was kind of a frustrating week on that level, but of course frustration is only in the mind of the trader, and certainly not in the mind of the market. Although I guess some people would say that that's what the market tries to do intentionally, is to frustrate all of us traders. But just roll with the punches. We know that our system is a profitable one, and keeps generating some good profits on a day-to-day and weekly basis. So we're just going to keep forging ahead, and looking forward to trading next week. And if you have any interest in our trades and what we're doing, then please get a hold of us at eMiniDayTrader.com, or email us at info@eMiniDayTrader.com. Thanks for listening, and have a really good weekend.